Good morning and welcome to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. Well, the S&P 500 is coming off of a higher close, sitting right near a record as investors focus on a week full of economic data and, of course, the Federal Reserve's final interest rate decision of the year. U.S. retail sales data was released earlier, and that is going to inform the Fed before it's anticipated to cut rates by 0.25 percentage point on Wednesday. Well, as of Monday's market close, traders priced in a 95% chance of that rate cut tomorrow. Let's take a look at what's on tap in today's show. That final Fed meeting of the year is underway today, and while it is widely anticipated that we'll see a rate cut, a pair of Wall Street experts are going to tell me what questions they hope Fed Chair Jerome Powell will answer when he steps up to the podium. And investors are currently reacting to retail sales data that arrived earlier this morning. My colleague Trinity Chavez is going to speak with Jane Haley and Associates Senior Research Analyst Jessica Ramirez about what story the numbers tell about the state of the consumer. And financial firm Ripple is debuting a new stablecoin today. A crypto expert will join to talk more about it and what we can expect from that industry in 2025. Let's get back to our headline story this morning. Of course, data out on the retail sector with November retail sales data coming in. And according to the U.S. Department of Commerce, those sales rose 0.7% in November from October. They were up 3.8% from the same time a year ago in November, and a lot of that was fueled by auto sales. It does paint the picture that the consumer is still in a strong place. We had even seen October's numbers revised a little bit higher. Well, joining me with more on this economy and what we can expect from the Fed is Ed Yardeni. He's a president of Yardeni Research. Ed, it's great to have you on the show this morning. And with that retail sales data just moments ago, plus a Fed decision on tap, what do you think it means for investors?
Well, I think it confirms that the economy has been remarkably resilient over the past 3 years or so. We've experienced the most widely anticipated recession of all times that never happened. And the economy just continues to crank out solid numbers, despite the fact that the Fed did tighten. But now the Fed is easing. And so the prospect is that the economy, led by the consumer, will continue to grow. For investors, that's obviously a positive for earnings and a positive for the market.
What do you think it means for the Fed decision tomorrow, Ed?
Yeah. Well, I think the Fed has pretty much signaled that they're going to do 25 basis points. They could still surprise us. I mean, they've provided enough guidance out there that they want to pause, that they might pause on Wednesday. But right now, it looks as though they're going to do 25 basis points. I think it's widely anticipated, and I expect that it'll be a hawkish cut, which means, it'll be kind of like thanks, but no thanks. They'll give us a rate cut, but they'll make it very clear. Jerome Powell in his press conference will make it very clear that the economy is doing better than they thought. Inflation's a little bit stickier, so maybe they're going to pause for a while.
And in terms of what the consumer is telling us, we know consumer spending does make up the bulk of the economy, Ed. The consumer seems to be in a pretty good shape. Is that right?
Very good. Yeah, absolutely. Look, the employment numbers can be volatile from month to month. They certainly, on balance, indicate that jobs are still being created. There's still plenty of job openings. Wages are actually increasing faster than prices. And then we've got a lot of people like me, baby boomers, that are retiring. I'm still working for a living, but the baby boomers are sitting on something like over $70 trillion of net worth. And as they retire, they are going to be spending those nest eggs. So all in all, the consumer's doing fine. Not everybody's doing fine. There's low-income consumers where we're seeing delinquencies going up, but delinquencies never cause recessions. They make recessions worse. And at this point, I think we've got to unbalance a consumer that's going to keep the economy growing.
I'm curious, Ed, in terms of a new administration set to take the Oval Office in January and strong growth that we see in the data, how that sets things up, especially for the Fed in 2025, and what it might mean for Fed Chair Jerome Powell.
Well, some of us are kind of confused by why the Fed has been signaling that they intend to lower interest rates fairly consistently going into next year. We'll see what the state comes out tomorrow says in terms of what they expect to do next year. But there's a lot of uncertainty about fiscal policy, and fiscal policy has been very stimulative during the Biden administration, and it looks like the stimulus is going to continue with tax cuts under the Trump administration. So I think fiscal stimulus is one of the reasons the economy continues to grow, and the Fed really has to factor that into their modeling of what they should be doing next. They don't want to combine very stimulative fiscal policy with very stimulative monetary policy, because then all the progress they've made on bringing inflation down will be for naught, and suddenly they'll be faced with an inflation problem again.
Does that have an outsized impact to the upside for certain sectors?
Well, look, I've been keeping it fairly straightforward, recommending overweighting mostly cyclicals. I think that continues to be the right place, though they're not cheap anymore. But technology, communication services, I think, continue to work. Those largely include the Magnificent Seven. So does the consumer discretionary. It includes Tesla, for example, and Amazon. So I think the sectors, the consumer discretionary and technology and communication sectors will work, and I think they will continue to be led by the Magnificent Seven, like financials a lot and industrials a lot still. I think the other sectors, I'd be underweight.
Interesting. One of the stories that we're covering later in today's show, Ed, is, of course, this massive investment that SoftBank's Masayoshi Son is expected to make in the U.S. following President Trump's election. Taking of the Oval Office, we should say, of the president-elect. What does that mean for jobs in America?
Well, I think clearly there's a more pro-business attitude coming in with the new administration. And that's already been reflected in the fact that technology CEOs, as well as venture capitalists, are flocking down to Palm Beach to have with President-elect. So I think it's all good. Technology, however, is not a huge employer. It creates a tremendous value without a great deal of upside in employment. But look, the labor market's very tight. I don't think we want to try to create too many more jobs, because I'm not sure we got the workers to fill those jobs. But certainly, if we get our immigration situation fixed, so that we can bring in a lot more qualified people legally, that would be very helpful for the U.S. economy.
Ed Yardeni, thank you so much for joining. Of course, an action-packed 2 days here as we await that Fed decision as the president of Yardeni Research.
Thank you.
All right, well, coming up, we're going to talk more about that. Japanese investment powerhouse SoftBank making a huge deal with the incoming Trump administration. We'll have those details up next.
So, Rob, you are the 11th CEO in Hekla's 133-year history, and you're actually 2 weeks in. You are ringing the closing bell today. Tell me, what appealed to you to take over the CEO position?
Well, firstly, this is a real honour, and what I found truly appealing was Hekla's legacy of being a leader in the silver mining space, a really incredible portfolio of assets, and a deep-rooted culture of innovation. So, for example, the underhand closed bench mining method, which was developed at Lucky Friday, that's really testament to that spirit of innovation, let's say. That not only improved safety, which is a core value at our company, but it really significantly boosted production. The other thing I would say is that the commitment to continuous improvement, that extends from everything from community to ESG in general to environmental stewardship. And they're things that I deeply care about. Above all, it's really the talented and the dedicated people at Hekla that really is driving forward the company's success.
Now, what strategic direction would Hekla take under your leadership, and what will be some of your key priorities for Hekla?
As the largest silver producer in Canada and the United States, Hekla really boasts a very high-grade silver portfolio with long reserve mine lives, underpinned by our flagship mines at Lucky Friday and Greens Creek. And so our strategic direction is really going to focus on maximising the value of our really extensive portfolio. And that includes finding a measured pathway to optimising production and profitability at our Keno Hill mine in the Yukon. So there we need to make some investments in some critical infrastructure, foster strong relationships with the First Nations of Nacho Nyack Dun, and really set Keno Hill up for a platform to be a very successful operation and turning it around like we did at Lucky Friday in the recent past.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. Well, on Monday, the incoming Trump administration and Japanese investment giant SoftBank joined forces in the name of job creation. President-elect Donald Trump and SoftBank CEO Masayoshi Son announced a $100 billion investment in the U.S. over the duration of President-elect Trump's second term. The deal comes with the vision of creating 100,000 new jobs focusing on artificial intelligence and emerging technologies. Joining me now with more is Melissa Otto, head of telecom, media, and technology research at S&P Global Visible Alpha. Melissa, thank you so much for joining. And what does this investment mean?
Hi, thank you. Yeah, it's certainly an interesting move. He's done this before. Masayoshi Son is prone to wanting to make a splash in the U.S. with significant investments. You know, I think if we look at their balance sheet based on Visible Alpha consensus, they are expected to have between $40 and $50 billion in cash over the next couple of years. So I think, you know, from a liquidity standpoint, the company is in a good place. And I think from an investment perspective, Son is probably looking for the next Alibaba. Well, I can remember the days when he shook hands with Jack Ma when it was just a startup and they were an early investor there. And that company has grown and done extraordinary things. So it'll be interesting to see what the next generation of AI startups are going to bring into the marketplace. And I suspect that that's what he's looking for.
Melissa, are there specific companies that you think could benefit from this investment?
It's hard to say. I mean, right now we've seen a lot of innovation in the model and the chip around generative AI, but what we really have not seen is a significant innovator around the application layer. And so I think, you know, that could be something where a startup really comes into the mix and with significant investment and a great vision could really change the dynamics of the ecosystem.
Mm-hmm. I'm curious, in terms of technology as a whole, we saw that sector really fuel much of the bull market. Of course, the bull market for the S&P 500 officially turning 2 this time around in October. Do you anticipate that momentum, that outperformance can continue?
We'll see. I mean, based on what we've seen in the index, 55% of the performance of the S&P 500 has been driven by essentially 6 mega cap tech stocks, with 17% of the return since the beginning of 2023 for the entire index coming from NVIDIA. So, you know, as we look forward over the next 2 years, it will be very interesting to see if we see a diversification there, if we start to see growth and momentum trickle into other industries. That's certainly something I'm watching very carefully. Additionally, cap size. You know, the mega caps have really dominated. Will we start to see a better environment for small caps, particularly as rates come down?
Mm-hmm. Of course, the market is by and large betting with about a 95% chance, Melissa, that the Fed will move forward with another 1/4 percentage point of a rate cut at its decision tomorrow on Wednesday. In terms of the impact here on the sector, what could that mean for technology names?
Yeah, S&P Global Market Intelligence also expect 25 basis points rate cut. What is going to be interesting is what he says about 2025 and the outlook, you know, what they may position. If we turn the clocks back a year, you may remember that he, you know, signaled that they were going to make 3 rate cuts, and the market went pretty wild in the last couple of weeks of the year. So it'll be interesting to see if he's a bit more conservative this year, or we get a similar type of commentary. I'll be keenly listening tomorrow.
It's been interesting because certainly amid higher rates that coincided with high inflation, certainly since 2022, deal making had slowed down a bit, and certainly startups weren't necessarily as much in the spotlight as we had seen prior to COVID. Could we see a changing of the tide here with the new administration starting in 2025?
I mean, I feel like every time there's a new administration, I get asked that question by the media. And I think, what our position is, and, what I've observed over the years of investing is that markets are not very good at discounting for any sort of political risk. Markets tend to react specifically to fundamentals and valuation and what the macro and economic environment are doing to support that. I think, going forward, if there are some policy changes, there may be, some incremental opportunities, but it's very difficult to say. Things just don't really seem to move that quickly when it comes to political agendas.
Melissa Otto, head of Telecom, Media, and Technology Research at S&P Global Visible Alpha. Thank you so much for joining.
Thank you.
All right, well, stay with us because up next, investors received fresh retail sales data this morning, of course, during the heart of the holiday shopping season. It covers the month of November. Find out what it means about consumer spending habits as we approach the new year.
Viewers a little brief overview of Arcus.
Arcus is a networking company. Essentially, we are kind of deep down in the plumbing that enables a lot of the packet flows that happen between computers that are in data centers and in between data centers and edges. And a lot of people have heard about companies like Cisco and Juniper and Arista, as well as Ericsson and Nokia in other parts of the world. So we are essentially a new age, next generation networking that does things similar to what Cisco's and the Aristas of the world do.
What sets you apart, though, from your competitors?
We are a programmable, software-driven networking fabric for routing and switching. So typically our competitors sell boxes, and so the box could be a router or a switch that goes inside a data center on top of a rack or in between data centers. We have come up with a network operating system that is universally applicable on top of different form factors of hardware, different vendors. Like we sit on top of Broadcom's hardware, we sit on top of NVIDIA's hardware, we sit on top of Intel's hardware, and then we can become a common network framework and fabric for everything from the edge to the aggregation points to the core of data centers, which becomes super pertinent for the AI wave.
And what would you say your experience has been being a part of the NYSE Wired community and how it's helped leverage your exposure on a global scale?
Oh, it's been tremendous. First of all, I think it's a privilege being a part of this network. Just the interactions and engagement and the introductions. We had a great happy hour here at the NYSE, and it was fabulous to meet a whole bunch of new customers, prospects, investors. And with a company that's growing as fast as we are, and with the importance that we play in our customer networks, it's a great catalyst and essentially...
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. Investors got their hands on that November retail sales data earlier this morning, and my colleague Trinity Chavez joins me now with more on that story. Trinity, good morning.
Hey, good morning, Kristen. For those of you just joining us, November retail sales data made its way to Wall Street earlier this morning. The U.S. Department of Commerce revealing that retail sales increased by 0.7% month over month. Joining me now is Jessica Ramirez, Senior Research Analyst at Jane Halley and Associates. Good morning. It's great to have you.
Good to see you again.
It's great to have you on the show. Now let's just dive into these findings. What would you say are the key takeaways for you, and what does it say about overall consumer behavior?
So the numbers, I think, at top level look like they're good. I think if you drill down to the details, grocery is down, apparel was still down. And the fact that grocery and also restaurants has come down, that makes me still quite concerned for the consumer. Now, all year we've been very concerned. They're very laser focused. So again, it still makes me stressed for consumer overall.
One of the key drivers in this data were auto sales, obviously up 2.6%. But what would you say, what does this say about the broader spending market?
Yeah, so I think being end of year, we've also had a few of the Fed cut rates come through. So I feel like that's a sign from that. But again, it's end of year, a big shop that you're going to do that you could do. But again, it still makes me concerned.
But you know, online shopping continues to be a major contributor when it comes to the retail growth. So how do you see the future of e-commerce shaping the overall spending and consumer behavior, especially in the coming months?
Yeah, so with e-commerce, I mean, it's done great. Also, November was a big retail sales, and some of that went into early December, which we've already started to see. What we've seen with November that we had was because the weather was warmer, a lot of the retailers wanted to get their inventory moving, so they added early promotions. So we had early Black Friday, like the first week of November, to try and cycle that through, and it worked. When we had Black Friday, there wasn't a lot of discounting as well, so it made sense for cyber sales to work a little bit quicker than it is for you to go into stores. But it's still a huge part of the business, and it's only going to grow. But again, we do have a nice balance of brick and mortar with e-commerce.
But speaking of online sales, what is the last day consumers can purchase online to make sure they still get their gifts and their packages before Christmas?
So yesterday, actually, I was looking through a few of them, and we started seeing like you have 2 hours, so you could get it by December 24th. And then we've had some that today was the cutoff. We saw from some of the actual delivery services, the parcels, the 20th. So it's going to vary. And this is where most retailers can flex their omni-channel. Do you buy online, pick up in store, and likely get a little bit more in store while you're there?
And you know, you were talking a little bit earlier about how we have seen a decline when it comes to grocery stores and consumer spending, especially restaurants. What do you think that says about the overall consumer economy right now? And does it align with your expectations?
Yeah, so first of all, for holiday, we believe it will be flat year over year because we are adjusting inflation to that. Inflation is at a 3%, close to or under.
Yeah.
And that's what they've been expecting holiday sales for. So again, if we remove that, it's flat. And the consumer is still very strapped with all of this. So the fact that grocery has come down and there might be an uptick in retail sales because, you know, we need gifting, it shows how the consumer is really it's doing a balancing act. Where can I pay a little bit more but take a cut somewhere else? And we've seen that all year, and I only expect that to go into the next year. Again, you know, many consumers have gone into their savings. It's a very tight budget that they're working on. And, you know, I think there's some retailers who will likely win. Off-price is clearly a winner for that because of the lower prices that we see there.
Let's talk more about that type of consumer behavior. Obviously, there are inflationary concerns, as you mentioned, and more consumers are being a little bit more discerning when it comes to certain purchases. Talk to me about what you're seeing about who and what are they prioritizing this holiday season?
So there's still winning categories that I think will continue to do well. I do think anything that is sport related, so again, very active, and I think this is what we talked about last time I was here. Anything that is beauty, categories within beauty that I still see positive is skincare, hair care, and fragrance. Those continue to do well, and they're great gifting. And it's something that the consumer has been very interested on. I think anything in footwear, as long as it's like sneaker performance, retro running, which is more lifestyle, Uggs continues to do very well, and also ballet flats. Again, we've talked more about where to work items, so if you think of soft tailoring and things like that, that also is still where the consumer is levitating towards.
But are there specific brands or retailers that you favor more than others during this time?
Yeah. So off-price, TJ has done really well, and they really do lean into what the consumer is interested in, so that would be TJ Maxx and Marshalls under that umbrella. Even home goods, there are some green shoots that we've seen throughout the year with soft home. Even though furnishing may not be as big, furnishing did show in retail sales an increase, but again, we don't have the consumer moving out as much. But other retailers, Dick's Sporting Goods still does fantastic. Amer Sports, which owns Arc'teryx, and also Solomon, that has done very well. The Deckers Group, Hoka, and UGG itself.
Yes.
So there's some that I think still have a lot of excitement around them with the consumer.
And you know, some merchants offer better return policies than others. Talk to me a little bit about that.
Yeah, so that has been a trend this year where, again, retailers are running a much more efficient operation system. So where do you take the cuts in order for your spend not to be as great? Returns is a huge spend for retailers. So that's where they've been trying to do more of that balancing act and not have those large windows, take back the free charges and things of that nature. So it's a different act. We do see shorter windows. Even for holiday, I don't see as many being extended as much, even though it might be like Walmart who does do that.
What's on your holiday list this year?
Oh God, I think anything for my nieces. My nieces are beauty fiends. So I have a 7 and a 17-year-olds who are looking for everything beauty. So that would be it.
Is your Christmas shopping all done?
Just one more. Just one more. Just one more. I did the rest earlier this week.
Okay, great. Amazing. Well, Jessica, it's always a pleasure having you on the
Same.
show. Again, Jessica Ramirez, Senior Research Analyst at Jane Halley and Associates. It's a pleasure having you. Now, don't go anywhere. The opening bell is just a few moments away, so stay tuned.
Right now, you're starting to see some trades develop. You can argue it a couple of different ways. Stanley Druckenmiller just this week argued that market's pricing in a Trump victory. If you look at things like small caps and cyclicals and Bitcoin, areas that might get deregulated more, might force more M&A, that's very much a Trumpian trade. And Druckenmiller's point was that if you look inside the market of the internals, you're seeing that. Others would argue, well, if you're counting on a Trump presidency to withdraw from, say, Ukraine, then why is Raytheon at all-time highs? Why is Lockheed at all-time highs? Why aren't a lot of exporters pulling back in their stock price if, in fact, we're going to be putting universal tariffs with the risk of retaliatory tariffs from other countries? So you can kind of slice and dice it any way you want. The Times did a piece a couple of days ago looking at how Harris's economic policy has evolved. And part of their argument was that she's been listening to some Wall Street business types and even some West Coast business leaders, Mark Cuban, Aaron Levy, Reid Hoffman, Reed Hastings, who have all come to her support and maybe are whispering in her ear, hey, we would love it if you'd just take an easier stance on antitrust or crypto or all things like that it would very much be in a business-friendly manner. So, is she listening to that? There's a difference between what you say to a voter and what you say to a donor. And some of the conversations we've heard about among the donors is that she is saying, I hear you. At the beginning of the year, we were counting on 6 Fed cuts this year. We didn't get that. Markets at record highs. So, in fact, the whole hiking cycle, the bull market has just gotten stronger and stronger. So we have this discussion a lot on air. Oh, the market's going to be so disappointed if we don't get the Fed cuts. No, the market.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Well, in just a few moments, NYSE listed Agilent Technologies, as you see behind me, is going to ring the opening bell and kick off today's session. Trinity Chavez joins me with more. Trinity, what do we know about what's taking place today?
Well, that's right, Kristen. Agilent Technologies is celebrating its 25th anniversary of listing here at the NYSE, and the company, which provides instruments, software, services, and consumables for laboratories, actually made history when it joined the NYSE community back in 1999, a spinoff from Hewlett-Packard. Now, Agilent was the largest IPO in Silicon Valley in history at the time. So today's bell ringer CEO and president, Padraig McDonnell, was appointed to Chief Executive Officer this past May. Currently, the company says that it serves customers in 110 countries. And Kristen, we've been discussing so much about the economy this morning. What should we anticipate right now, right after they ring the opening bell?
Trinity, you're exactly right. So I think the Fed decision squarely in focus for investors. We would be shocked, right? The market would be shocked if we see anything other than a 0.25 percentage point rate cut. Of course, 95% chance of that. Traders are betting. But I think the big question, as our guests have been saying, and as market watchers know, is what the Fed Chair Jerome Powell might have to say about future rate cuts. The economy has been so strong, so it might cause the Fed to pause in the new year. Let's take a listen to the opening bell as it gets underway. right, we are officially off to the races here on Tuesday, the first day of the two-day Fed meeting. Of course, interest rates squarely in focus for investors in our NYSE TV live viewership. So joining me now to talk more about the markets is Rod Von Lipsey. He's Managing Director at UBS Private Wealth Management. Rod, it's great to have you on the show today. And in the wake of this better than expected retail sales data, how does that impact what we might hear from the Fed tomorrow?
Well, I think that we are looking forward to, as you mentioned, a 25 basis point rate cut. I don't think that Chairman Jerome Powell is going to frustrate the market or disappoint everyone with anything less than that expected rate cut. But certainly we're starting to see signs that maybe the consumer, maybe the economy, things are strong and they're good. So perhaps we won't get all of the interest rate cuts that we expected to receive next year. And so that's part of what we're seeing. We're also seeing the 10-year Treasury has been rising slowly, getting up towards 4.5%. And the market doesn't necessarily like that because it implies that maybe there's some more weakness ahead.
We have seen stocks take a pause near record highs, but still notable that the S&P 500 is up about 27% this year. So a banner year to say the least. What does that mean as we enter 2025, and what are you advising your clients?
Well, it's certainly been a banner year. And, you know, there's a lot of concern out there because we're looking at S&P valuations at about 23 times earnings. You know, that's really getting up there and it's feeling a little bit frothy. And so that might be a reason that we're seeing a pause. And then some institutional investors have had a fantastic year, as you pointed out. And so maybe taking a little bit of the chips off the table and going home for the holidays and considering it a win, that's a good thing. We're telling our clients, though, that we expect that 2025 will continue to be a very supportive market for equities, especially for risk equities, because we're seeing everything come together. We have a Fed that is planning to cut rates. You know, we might argue, is it going to be 3 rate cuts or 4 next year? We're seeing a president who is taking a look at the capital markets. Him ringing the bell last week at the New York Stock Exchange wasn't lost on anyone. So we have a president who's going to be looking at his scorecard by how the economy is doing, how the markets are doing. We've got a very, very strong U.S. economy and a U.S. industrial base. So this is setting up by just about every measure to be a good year in 2025. So that's one of the things that we're telling our consumers.
I want to get your take, Rod, just in terms of how you're factoring in the tariff conversation. We've had guests on this show say that really some of the tough tariff talk is nothing other than a negotiation tactic at this point. But of course, if it does become reality, economists have estimated that it could weigh on the economy. So how is that factoring in to your outlook?
Well, we're just like everyone else. We're really thinking about that as being one of the risks. And that's one of the key risks for disappointment in 2025. If in fact there are tariffs and they are perhaps as onerous as some have suggested, there certainly will be a retaliation, and none of that is good for the markets. None of that is good for the U.S. consumer, and it certainly won't be good for the U.S. capital markets. So that's a risk that's out there on the horizon we're thinking about, but we won't know. And those tariffs are going to be perhaps a tool for getting policies and things that we want. So that's a negotiating condition. And we really don't want our investors to really look at that and feel that there's going to be something that happens on day one. We're going to need to watch the tea leaves here. But that's certainly a risk for 2025. Again, as are some of the valuations and the mismatch that we're seeing in valuations. Coming back to it, though, when we look at the underlying trends, we see strong and supportive growth. We see areas like AI and technology, especially the software pieces of AI, showing us real momentum and real opportunity for earnings growth. So tariffs, absolutely, big risk. But we don't think that investors should be focused specifically on tariffs. We think they should just let this play out, let the president take his negotiating stance, and we'll see what happens when 2025 rolls in.
For consumers watching the show right now, wondering, are grocery prices going to go down? Will I finally be able to save more in the new year? Do you anticipate that inflation can reach the Fed's 2% target?
Well, I think that the Fed is pretty darn committed to that. But we have a real challenge, and that is that many Americans, and this is reflected in this selection, many Americans are looking at the prices of everything from groceries to holiday wreaths to Christmas trees, and they're staggered by the fact that even if the inflation is slowing down, on an absolute basis, things are still expensive, and they're very expensive for a lot of Americans. Will we see those things go down? I think we're seeing the pace of increase slow, and we're starting to see some modest reduction in prices. We're starting to see some modest reductions in home prices and things like that. But wage growth is still strong. Wages remain robust. The employment levels remain very robust. So it's going to be a while before we start seeing those things come down. Those items that are geared to energy prices, there in fact may be some opportunity for those to be the early movers in price reductions. But as far as food, dairy, those types of consumer products, they are high, they're going to stay expensive, and we think it will take a while before they start to move themselves back down, or consumers start to get used to looking at prices that look familiar to them and don't feel like such a sticker shock.
Rod Von Lipsey, Managing Director at UBS Private Wealth Management. Rod, thank you so much for joining.
Kristen, thank you. Happy holidays.
Happy holidays. All right, well, stay with us because up next, with schools cutting bus service, students are resorting to a new way to get to classes. What that might mean for inflation, up next.
A pleasure. So I want to start off by talking about the company. Tell me about FISNA.
FISNA is short for physical DNA, and what we do is we analyze the physical world and turn it into code. And what that really means is that we open up the floodgates of all the potential of AI to what's physical, and we're able to do things that weren't possible in 3D before, right? We can take 3D designs and use them to automate things like we have autofill for 3D. We can improve supply chain decisions so that you're able to find the same part from a different vendor because it has a different part number, and save a lot of money that way, and make a lot of other intelligent decisions for your company or your Department of Defense in some cases, another group we work with, for things like inventory management, part acquisition, part maintenance, et cetera. And so we work in a various number of industries, but it's been great. Over the past year, our revenue has grown about 10x year over year, and a lot more to come this coming year. And it's been great we've got great supporters. We have Sequoia Capital behind us, Drive Capital, Google Ventures, and several others that have been just fantastic to work with.
So now, when it comes to search, what do you have here that others can't do?
So the secret sauce that we have is this patent around 3D intelligence. And that really allows us to normalize that 3D data and essentially allow computers to do everything with the physical world that they were previously able to do or currently able to do with things like text, right? So being able to identify, in some cases, manipulations that have happened to 3D models that might have happened as a result of like a cyber attack, or things like, as I mentioned, autofill or procurement decisions, is this the same part? Is there a deviation in the part? Can we use this as a suitable alternative? And getting really deep intelligence out of models that weren't possible before. It's kind of akin to if you were, let's say you were a healthcare company and you were trying to use AI to evaluate humans and how you can help them. Well, right now in the 3D world, think of it like analyzing pictures.
Welcome back to NYSE TV Live. I'm Trinity Chavez in studio. Now, as AI continues to dominate headlines around the world, and I sat down with May Habib, she is the CEO of Ryder, to learn more about how her company is bringing this transformative technology to large enterprises. She shared how they're revolutionizing customer support, streamlining operations, and empowering teams to focus on the human touch, ultimately driving satisfaction, loyalty, and competitive edge on this episode of Taking Stock.
In generative AI for the last 4 years, working on bringing generative AI to the enterprise. And what we've learned from folks is they need a full solution. LLMs are very powerful, but not enough to very quickly get to value on these mission-critical workflows.
And you recently announced a $200 million Series C funding with some of the biggest and most influential companies backing this effort. Talk to me more about the partnership and why was now the right time to have this fundraise.
We had some incredible corporates join the round: Salesforce, Adobe, Workday, IBM, and there's a real realization that enterprise generative AI, especially where we're going on agentic workflows, requires a real understanding of these real world mission critical flows that is just much more complex than folks thought. And I think being able to stitch together multiple systems, multiple departments with generative AI, rewiring these flows requires really a coalition. And that's what is so exciting about the Series C that we raised.
What are your plans for this new funding round?
Certainly expand the team, expand our footprint, but invest in this next generation of models, action-oriented models that are capable of autonomous action inside of the enterprise with reliability, consistency, security that enterprises need.
Talk to me about how your past experiences have helped shape the ethos of your company today.
I grew up in a small family business and learned a lot about the importance of staying really close to the details of your business, the roots of your business from my dad. Words have really shaped how I grew up. I've been a writer, a journalist, from my high school paper to my college paper. Writing is thinking, and now writing is the interface to superintelligence, and it's just incredibly democratizing who can become a builder using generative AI today.
And talk to me more about how generative AI and AI technology is changing the way we communicate today.
There is so much more that can be done to communicate in a highly personalized way. We're helping financial advisors in asset management, wealth management, be able to say, Trinity, thank you for your business. Here's all the different ways that we can help you, very personalized to your goals and your experiences with the company. And that just was never possible and is possible with generative AI.
Now, another story impacting the tech sector involves how students are getting to school. According to a report by the Federal Highway Administration, only 28% of U.S. students relied on school buses in 2022, down from the 36% in 2017. Now, this comes as districts are cutting bus service, forcing more students to rely on ride-hailing applications. Dan Ives, Wedbush Securities Global Head of Technology Research covering ride-hailing platforms like NYSE-listed Uber, is joining me now. Good morning, Dan.
Great to be here.
What key factors are driving the decline are you seeing in school bus usage, and how are ride-hailing platforms like Uber stepping in to fill the gap for student transportation?
Yeah, it's an issue with funding municipalities. We're seeing it around the country. You know, the double-edged sword is as negative as this is for many communities. It's actually a positive when you see more and more ride sharing. And I could ultimately see down the road, schools are going to have to step in, you know, where they're going to have to give some sort of almost support financially, or at least subsidize some of these ride shares as this continues to expand across the country.
And how significant is the student transportation segment to the growth strategy of ride-hailing companies like Uber?
Look, I think when you look at school, but I would encompass whether it's getting to sports, other activities, I mean, especially during the week, this is something that could be 5 to 7% of overall rideshare. So it is something, especially in, you know, call it teenagers and some of the, you know, where I'd say even the early, you know, call it 15 to 17-year-olds. I mean, it's a growing population that are using Uber, even younger. So I think this is something when it comes to rideshare, it shows the importance more and more, not just for Uber, you know, as others in the space, but this is not going to stop. It's going to continue to accelerate.
And how would you say ride-sharing platforms, they're scaling up their operations to meet the growing demand for student transportation, especially during peak school hours, when it comes to the broader tech sector?
Yeah, I think it's becoming more and more of a pain point, because as more municipalities have cut off buses, parents are working, they can't drive their kids, you know, especially on some of the hours, ride sharing is going to fill that spot. And I mean, it's no really different than what carpooling was when you go back maybe even 30, 40 years ago. But I do see down the road, you're going to see subsidized rides for more and more within a lot of these districts if they can provide buses.
And speaking about down the road, as we close out 2024 and head into 2025, talk to me about some of the biggest trends that you're on the lookout for as we enter the new year, and some of the biggest key players that you're eyeing.
Look, I think broader, when we look at tech, I mean, it's our view we're going into a third year of what's going to be a 6-7 year bull cycle. I think when it comes down to the AI revolution, it's a fourth industrial revolution playing out. But it's not just about Mag 7, it's going to spread out to the rest of tech, use cases on the enterprise, use cases on the consumer, which is, it's our view that tech continues to move higher given this once in a 40, 50-year generational trend.
Now, as we see the new administration take shape this January, how do you think that's going to have, what effect do you think that's going to have on the broader tech sector?
Yeah, I think we saw last week with Trump making the historic visit to New York Stock Exchange. I mean, it's a new age. I think you're going to see more and more AI innovation. I mean, we saw the SoftBank, the Masa investment yesterday, the $100 billion. And this is something where the strongest are going to get stronger. Big tech's going to continue to get stronger. It's I think, a unique time in terms of innovation. And I think what we saw even last week, I mean, more and more CEOs are happy about what we're seeing in the broader environment. That's why the market's doing what it's doing, foreshadowing, I think, what's going to be a golden age for AI.
What's the biggest thing that you think investors should keep an eye on?
I think you keep an eye on the second, third, fourth derivatives of AI. As we've talked about, the bears can see AI in their spreadsheets when they're hibernating in their caves. It's trying to find the second, third, fourth derivatives across AI in software and cybersecurity as it's all played out. And I think that's sort of the next stage. It's only 10 p.m. in the AI party that goes to 4 a.m. It's not stopping.
Well, it's going to be interesting to see where we go from here as we lead into 2025 and how more businesses are implementing AI and Gen AI into their business strategies. I'm sure we'll have you back on the show to talk more about it. Thank you again, Dan Ives, Wedbush Securities Global Head of Technology and Research. Now, Bitcoin isn't the only cryptocurrency making headlines. Coming up next, we're going to have details on another token making plenty of noise across the digital asset ecosystem when we come back.
So Wipro is one of the leading global technology services companies. We are over 230,000 people, headquartered in India.
Oh, wow.
And our focus is on AI and leading with our AI strategy. So bringing AI into everything we do, our tools, our solutions, and our platforms to help our clients drive value.
What is the problem that you're trying to solve, though?
So all of our clients are looking for new sources of revenue, driving improved client experience, and delivering more profitability. So AI has the opportunity to truly revolutionize every industry, banking and financial services alike. And the opportunity with AI we're already seeing in terms of clients leveraging it to improve their experience, whether it's their financial advisors or their retail banking clients, to really make sure that they're giving that high-touch, trusted experience.
Are there any specific sectors that you're focused on from a business standpoint?
Yes, our wealth management for AI. We did a survey of 100 C-level execs in wealth management, and we found over 44% of them are already extensively using AI in their wealth management business, and 72% of them are already seeing it improve their competitive advantage, meaning the insights they have are making them work better with their clients. So what we're doing with wealth management, we're partnering with Microsoft as well, is to deliver a high-touch experience. So think about ultra-high net worth clients who have $100 million. They have financial advisors who take very good care of them. How do you bring that down to the clients that are 1 to 10 million, the mass affluent who are even below 1 million? How do you create that high-touch experience? And that's what we help our clients do with the platforms and solutions that we bring to them and leading with AI.
And how are you implementing your AI strategy, right, when it comes to investments?
Yeah, so last year we announced $1 billion investment in AI. And since then, we started with making sure we trained all of our employees on response.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. Well, stocks taking a breather right near record highs as the cryptocurrency market continues to be in the focus, also near its own records. The price of Bitcoin, of course, dominating the headlines across the crypto sector, the most popular token after it topped $107,000 a piece yesterday. But other tokens are in the news, too. In fact, today, Ripple's new stablecoin will officially start trading. The token is supported by U.S. dollar deposits, short-term U.S. government treasuries, and other cash equivalents. Ripple received the final go-ahead to debut the token by the New York Department of Financial Services last week. Well, joining me now with more is Aurélie Barthier, Principal Research Analyst at Nansen. Aurélie, thank you so much for joining. Big news, of course, that we've been following in the crypto world, and most recently with Ripple announcing that it will be trading its newest stablecoin, Ripple USD. Why now?
It's a great timing for many companies, not only purely crypto, because we are bound to have some clarity on stablecoin regulation. And the motto of this administration will be sort of traditional financial companies and crypto companies getting together in a clear regulatory framework.
So with Ripple getting into the stablecoin market, competing with the likes of Tether and USDC, do you think it was a smart move?
It's true, it's a very competitive space. And the advantages of Ripple is it already has a series of partners, banks, remittance companies, mostly out of the US, not so much in the US. It has established technology, which is cheap and fast. So there are some competitive advantage, but it's true it will be very competitive field.
We've seen Bitcoin surge, topping $107,000 a token just yesterday. What does this mean for the industry and the momentum behind it?
Yes, it was quite retrospectively. The Trump trade was actually buying crypto, very simply, not buying really equities, but buying crypto. So I was really surprised at the shallowness of the correction we got post-election. I think we got 7 weeks up for Bitcoin and just 1 week of correction on low volume. So there is really a lot of buy the dip mentality, and there is a lot of very strong power of buyers over sellers. I think seasonality is helping also in December. And then it remains to be seen when kind of actual policy meets expectations, how the price reacts.
Well, most recently we had seen the firm that you work at, Nansen, launching 2024 year-end report, as well as outlook for the new year. What are your findings for our audience?
We find that basically there are a lot of good news that are priced already in crypto token prices, Bitcoin, but other assets. So we've seen the different crypto-friendly nominations among the Trump administration, whether it's the SEC or the Crypto Tsar or Commerce. We're still expecting a bit of crypto-friendly nomination at the CFTC, so it's still to come. But like really the biggest driver of crypto prices in 2025 will be if we actually see institutional adoption materializing, and that can sustain the price. But I do think in the short term, the rally is so strong that we might get some kind of correction maybe in Q1 2025.
I do want to talk about that because we had seen Bitcoin take off previously in years past, came back down to $20,000 a token. That low seems like a far off land, of course, Aurélie, based on what we've seen, the momentum and gains, of course, the record rally of late. With the correction, are you anticipating a 10% pullback? How low do you think Bitcoin could go?
Yeah, I think we could have a double-digit pullback. I don't think we revisit 20,000. We will only get a significant correction if we have like the macro conditions for that. So either slower growth or accelerating inflation. So far, it doesn't seem that accelerating inflation is the main scenario according to the data. Slowdown in growth doesn't seem very likely yet. So far, it's a good setup, at least for the US economy in 2025. What can happen is really some disappointment because all this regulation, all these measures will take time over the next 4 years. So it might be that traders and investors get a bit impatient. And then we would get some correction, but I would not expect as deep as if the economy was really becoming less favorable.
It certainly is a vast market, the cryptocurrency space, Aurélie. So my last question to you is, what are the top tokens this year that have been making the marks?
This year, like really the most impressive was Solana in the crypto community. I think it started the year 2024 with 1% of total value locked on chain, and it ended the year with 7%. It kind of really implemented quite a few technological updates. So it was a very, very impressive performance from that point of view, and also from the price point of view. Lately, we've seen a kind of a comeback of Ethereum that has been really underperforming. And this is linked to the whole narrative around DeFi becoming more regulated and more kind of institutionalized. So yeah, I would say, aside from the obvious, aside from Bitcoin, Solana was really one of the token of 2024.
Aurélie Marthier, Principal Research Analyst at Nansen. Aurélie, thank you so much for joining.
Thank you.
All right, Trinity, I want to bring you back in here. Of course, we've been covering so much action amid this busy holiday season. It is also a very busy market week, and I really enjoyed, in fact, your conversation earlier about retail sales data, some of the companies making the mark, and even the sectors as well.
Yeah, absolutely. You know, consumer confidence is strong. People are still spending, especially when it comes to the e-commerce space. We're seeing record numbers still hit the market with that consumer sentiment as we approach. Well, actually, we're in the holiday season, but you know, they are prioritizing what they're spending their money on, as we were talking earlier about in our segment. But I have to say, I am going to try to make that December 17th cutoff for the last day of shipping, Kristen, because I still have a few more things to get on my list, and I have to make sure that I get it before Christmas time.
Well, that's today, Trinity. It's the 17th.
I know.
Are you prepared by end
I
of
just
day
looked at
to
the
get all
calendar
that finished?
Oh, I am not prepared. As you can tell, as much as I like to shop, when it comes to, you know, the craziness of the holiday season, I have to say I put it on the back burner, so I'm a procrastinator. But what about you? Are you all done?
I'm close.
You're close.
I'm close, but I got to get on that train as well. So
well, we'll
be there together, my friend.
Yeah, exactly. We have the rest of the day so to get it done. So maybe on our lunch break, we can kind of collaborate and see what we have to get in before the day ends.
I love it. All right. Well, speaking of holiday cheer, we want to wish a very happy birthday today to our director of broadcast, Ian Wolf. Ian, thank you every day for putting this show on the air. Viewers, a reminder, you can watch on X and many other platforms as well. Thank you for watching today.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.